All right, welcome to Acquisitions Anonymous. We're doing something special today. We're recording on a Wednesday rather than on a Friday, and we also have a special guest and a special guest co-host. And for those of you that are new, this is our 50th episode of the internet's #1 podcast about small businesses for sale. Every week, me, Bill, and Mills, both of whom are not here today, but I'm Michael Gridley, we get together, usually with a guest, and we talk about 2 small businesses for sale, and chaos erupts, and we also learn a lot from each other and provide some pretty interesting content about them. Today, we have 2 cool deals to talk about in the online website digital marketing space, and a special guest and a special co-host. So special co-host is Franco Pereyra, who works with me and is a colleague and runs our business Near. And our special guest is Ari Ozick, who is joining us. And this is the most international version of this we've had so far, with Franco in Buenos Aires, me in the foreign country of Texas, and Ari in Israel. So pretty cool. Ari, thanks for being here.
It's my pleasure. I'm excited to be here.
You're also our first guest to refuse to be on camera, which is awesome and totally welcome. So it's going to make it even better. So excited to go through that process.
Like I said, I have a face for radio.
Yeah. No, right now, I have no data to argue with that. So cool. Let's get started with Ari. Introduce yourself. Tell us about you and what brings you to be with us today.
Right. So my name's Ari. Like we said, Ari Ozick, and I run a company called HRX Capital, which is primarily in the digital media space. Digital media, is websites, lead generation, that sort of thing. I think a good way of describing us is a smaller, scrappier, much less sexier version of Dotdash. If you're familiar with the IAC universe, we run very similar sites to stuff that they run on a smaller scale. And we acquire a lot of them as well. I've been in the industry since 2006. I've been doing this for about 15 years now. And it's been amazing to see it grow. And I'm just love talking deals and listening to the podcast. So I'm excited to be here and take apart a few of these deals.
Yeah. And you're one of my favorite folks to interact with on Twitter. So we'll definitely push people that way because your content is excellent. There's a small tribe of us contrarians on Twitter and one of my favorite to work with. So cool. So Franco, thanks for being here as well. I think I shared with you, we're trying to make this podcast get from a money-losing enterprise to a break-even enterprise. So we have sponsors that are helping with that. And I'll do a couple live reads as we go through and talk about our sponsors a little bit. The first one that I want to talk about is a group that paid us, which makes them an amazing sponsor, and but also has a cool product. So let me pull this up here and everybody can see it. It is a group called the Scribes that is putting out notebooks, and they are New York City based. You can buy journals from them, kind of hardcover and softcover. And they're a team of 4, and for every journal that they sell, they donate one to students in need. And since their inception in 2020, over 10,000 students have a new notebook thanks to the Scribes. So basically Tom's Shoes, but for notes books. So pretty cool idea. They have 90-day planners and a new one that new product that is some pens called the Quill. It's called the Quills, which is pretty neat here. We pulled that up for those of you on YouTube. If you're interested in buying one, you can go to their website, thescribes.co. And use promo code podcast for 10% off your purchase. So they're giving our listeners a special deal. So thanks to the folks at the Scribes for sponsoring today. And so we're going to start with, I'm going to read both deals today. So pretty exciting. We'll go to the first one. And I think we decided we were going to do this Project Gaming one first. Is that right?
Yeah.
Cool. So Project Gaming is one that's represented by a broker. And so we have a teaser for that. I pulled that up. So looking at the past few years, revenue-wise has been, looks like pretty flat, right? So 2.8 in revenue over and over, located in the South Atlantic part of the U.S. EBITDA is about 2 million on 2.8 million in sales. So 73% EBITDA margin. They are in an industry of education and services, schools, sports instruction, sports instruction camps or schools, sports instructors, blah, 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 and all these industries that the broker lists them as in. And the deal description, we don't have a ton of information on it, but I'm definitely curious about something operating at 73% EBITDA margins. is the company operates an online site that specializes in training of a specific sports activity. The revenue model is monthly subscriptions and consists of thousands of clients. The company has over 20 years of video content and instructional videos and very robust content library. The founder is seeking to sell the business and will remain with the company post-close in a celebrity and lead instructor role. So
not much to go on, right?
Not much to go on. And then the broker, as we discussed before we started clicking record, the broker has a very good headshot. That is a very professional photo. Noah, who runs the brokerage for this group. So this is what we know. And then you can get an NDA and a SIM and all that kind of stuff available, I guess, if you go talk to Noah. And he appears to be somewhere in Georgia. Woodstock, Georgia is where Noah is located, the broker. So thoughts or questions on this one? Besides, we don't know much about it, but it's curious.
Right. I feel like the numbers are a little bit fudged. I think we'll have, you'd have to get like the actual NDA. It's one of those where they have some numbers. I kind of like it's exactly making 2.8 every year consistently. I feel like we're missing something. I mean, there's like no talk about churn or everything. I love businesses like this though, with the 73% margin and the strong user base and the membership. And as I was talking before, I kind of decided that this is probably golf, like a golf sort of a membership thing, because there's a celebrity lead instructor. And that's typically like you see that like golf instructors, semi-pro, pro, and then they go like it doesn't make sense to me. That would be like basketball. People are, what sport are people actively interested in fixing, and getting better at? And so to me, it's probably a golf membership site. I mean, I could be wrong. It could be like, for all we know, it could be Ultimate Frisbee, but like that'd be great, right? But it's it just kind of leads me to believe it could be baseball. I don't know, but anything where the margins like this are they claim 73% or is out of this league. It's really just stuff we love. So I think I'm sure there's like all these businesses, I'm sure there's something wrong with it. Like when you start looking at the P&L and start like reaching into it and trying to figure out the churn numbers and everything is not roses as much as you think, or like the instructor is the draw, like there's a key man risk. But these type of businesses where it's like it's like a smaller version of Skillshare or whatever for a specific thing do really, really well, because you have people who are just passionate about that marketplace. And then, like we've been talking about on Twitter, you can probably raise your prices without any, real issue. If we keep talking about inflation and everything, people, if you up the monthly by a few bucks, you'll up your EBITDA. There's a lot of, I think, opportunity in these types of businesses.
It's very interesting. So let's dig into maybe like the stuff you would go look at first after signing an NDA and a SIM on this. Like, what sort of things would you, being experienced in this kind of stuff, like this website? I mean, this is basically a paid content website. Like, what kind of things would you go look at first and be worried about and dig into?
I'd be worried about churn primarily. I think that would be the number one thing, and then I'd want to see what the LTV as a customer is and what their cost of acquisition is, right? Sort of the things that you worry about for any online business, but coming back down to digital. And I'd be curious why the growth is so flat. Because that doesn't make sense to me. I mean, maybe COVID, but with COVID, you'd sort of expect things to go way up. Big 2020 is not normal for most of the businesses that we see because everyone was home. And so that would, I'm curious why it hasn't gone up at all. And then also, where's the traffic coming from? Is there like sort of like a healthy split between paid acquisition, organic acquisition, or is it all like, they have a deal with Golfer's Digest and every single customer comes from there, right? So sort of like, the typical sort of things that you look for in any business, but applied to digital. So customer concentration, customer acquisition, churn, and then, how stale is the content, and what the lifetime value for us is a big part of it. Because if people are only staying subscribed for a month or two, but they just have a great acquisition channel that doesn't cost them anything, well, then the product needs improvement, right? Because you want to be able to sort of diversify into other acquisition channels that cost money.
And Franco needs to talk because I haven't talked yet, but I have one more question that I'm going to make and ask Franco to ask.
Sure, go ahead.
How do sites like this keep people, and this may be a really dumb question, like if you have a static content library like this, how do you keep people from coming in and just downloading all of your content, like scraping it and paying for 1 month and then churning? Because I'll admit, in my younger days when I was more broke, like I did that.
I don't know what you're talking about, but the it's a problem. I mean, you can ask anybody who has a digital course. It's really an issue, and there are sort of, I think it's just probably the easiest way to answer is the cost of doing business. I would say that if this company is over 20 years of video content, it really makes me believe that it skews to an older age group that don't know how to BitTorrent. And even if they did, like, they wouldn't know where to look. Right. But I think what you're talking about is an absolute problem. And I think it's just the cost of doing business. I'm sure, like, I really have no idea because I've never looked, but I'm sure you could probably go onto any of the torrent sites and find a masterclass. Right. But most people, I think if they're given an option to sign up, they will. Like, those people who pirate the content weren't going to be your customers anyway, I think. But yeah, no, I think it's just the cost of doing business at the end of the day. And I think if it gets to be too crazy, then I think you have to figure out something. But I don't think that for most people, it's a major issue the way they make it seem, right? But it's definitely an issue. And then, some people will hire takedown experts until you sort of like, you can pay like a monthly fee and they'll go onto all the torrents and they'll try and fire DMCAs at them and all, and get stuff removed out of the Google index and, but it's trying to play whack-a-mole, basically. If that answers your question.
Yeah, no, totally dig it. Okay, Franco, I've done all the talking. Anything come to mind?
Yeah. Ari, you mentioned before that something you like to dig into would be the source of traffic.
Yeah.
And if all the traffic is paid traffic, is there a split or a certain percentage that you feel comfortable with this business? Let's say it's 30 paid and 70% organic or something like that.
That's a great question because I'm probably going to shoot myself in the foot, but I'm going on record here saying I'm a little bit of a hypocrite in the sense that I don't love buying businesses that like are very dependent on organic traffic, but I love owning them in the sense that if like we start them from scratch, I don't have a problem with that. I have more of an issue where buying it from scratch. But I think like I'd prefer for a business like this to see like what I really want to see is something like, which is very hard these days because of the concentration, is like a 30-30 split, 30-30-30 or 33-33-33. So like 33 organic, 33 paid, and 33 like social. But that social could also be paid. But I think that's very hard because what you discover in life, especially the smaller side of these things, is that people get very good at doing one channel. And that's the channel that they just execute on incredibly well, but they haven't got the other channels, which is fine. But you just have to figure out either you have to be really good at another channel that they haven't done and be ready to add that as soon as you do the acquisition to bring in more revenue, or just get really comfortable with the risk that being a one channel business is, right? I mean, there are just a lot of one channel businesses online that make a lot of money. And I think it's just, part of the risk that you have to absorb when you buy these companies.
Mm-hmm. Yeah, I'm interested in the part of the channels. And when you say paid, you mean mainly PPC, giving money to Google ads, or everything, content marketing, email marketing, and all?
I mainly in my head, and this again, I'm a little bit of a dinosaur in online terms, which is funny because I'm still under 40. But like in my head, paid is like really Google. They don't even call it AdWords anymore; they call it ads. But that's like really PPC. And then I view content marketing as like a part of organic acquisition, and so like it goes in that bucket, the cost that you pay there. And I think email marketing is a totally different game, and I'll be the first to tell you that I know enough to know that I don't know enough about it. And you can run whole businesses just on sending mail to other people's lists and list bartering and doing mail drops. And it's a whole nother world that I'd be lying if I said I have the detailed expertise to give you a lowdown. But I would know who to talk to. But I think like that's a whole nother bucket, right? To me, in my head, paid is really like AdWords and then Facebook because they're just kind of like the giants in the industry. But it could just be as like if you were an app, it could just as well be your paid on the App Store and on Google Play, right? So that's how I think about it.
How do you think about, well, in terms of shopping for this kind of asset, compared to some of the other stuff we look at, like this teaser is very vague. And like, we've also talked about the broker appears not to be somebody who returns phone calls very actively. So like what, is in this kind of niche of buying these high margin websites and these sort of things that you shop in, is this kind of the normal, like, are the listings all this bad? Like,
No, this is actually one of the worst I've ever seen, but I really think it's a good business to talk about. Like, I like the numbers if they're real. I think like, I don't want to shoot don't want to like knock any specific broker. I think if this had probably been given to a different broker, it probably would have been garnering a lot more interest. But they might just be at a different stage. I don't really know what the story is. But no, I most of the brokers who are dedicated to the space, right? That meaning like it's not like one of the franchises that happen to pick up an online listing, but like you're sort of like dedicated digital brokers in the space. And I have a listing on my blog somewhere, and there are always new ones popping up. They tend to have better information, even in their pre-asking, and then and even a little bit better numbers. And then of course, if you get the NDA, you usually get pretty detailed CIMs or CIMs. So yeah, like I said, this one's pretty bad.
Yeah, but so and then how does that make you think about like how you're going to be investing your time looking for deals as a buyer? Like, are you attracted to crappy listings? Like, I know there's people that are like in the real estate space, they're excited when they see a commercial listing done by a residential broker and vice versa.
Yeah, totally. No, I took it off my Twitter, but I used to say that I am digital dumpster diving for deals. And I think that I love when the wrong broker gets a deal. Although it can make it difficult sometimes because they don't know the industry at all and things are mispriced, but mispriced the wrong way. And I love sort of distressed. We love distressed deals, but like you have to really be on top of like 1,000,001 things. We must know, like we try and talk to every, distressed person in the space, and we're constantly monitoring for deals like that. But we love sort of anything that is poorly written and poorly, like not getting enough eyeballs on it, right? Like we love that sort of that's amazing. It just doesn't happen enough. So
what qualifies something as distressed? Like I'm just trying to get my brain around how something that runs at 73%, like
no, this is not distressed. This is great.
Yeah, not this, but
anything goes into receivership, bankruptcies. One that like I said, like the problem with this is that you can't, like once you sign NDA, you're limited. But like there's the income store receivership. I don't know if you're familiar with that one, but it was basically a Ponzi scheme. And you can Google it. And basically, like you put in money into this company, and then they gave you ownership of websites and everything. And no one ever understood how it worked, but like, and it didn't. But some of the assets were good, and so like the receiver gave some of the assets to the people who lost money in lieu of actual capital, and then like the rest went for sale. So that auction is mostly over now. So, but like that's like one way. So some of the assets were fine, right? Like some of the assets were making money. It's just like they had to be sold, and so they were distressed, right? Like that's. Stuff like that work. And then you have things that end up in Chapter 7 or Chapter 11 bankruptcy. And if it's a digital site, it might have just been neglected. And with a little bit of work, it can come back to getting, not necessarily 73% margins, but 40, 50% margins, what have you. So
fascinating.
Yeah.
So another question for me, and then I want to shut up so Franco can ask for sure. But so one of the very unique thing here is this, this celebrity lead instructor role.
Sure.
A lot of times I think these online businesses, right, the moat is where they are in Google rankings,
right,
like their establishment and all that stuff, or similar kind of moats. This one seems to have a unique feature in terms of this celebrity person.
Right.
So how do you think about that in terms of evaluating this deal?
Well, I'll tell you what's funny is every time I look at it, it's right above the guy's headshot. So I keep thinking it's him. But like if you see it's like above no answer, I'm like, oh, that's the celeb, but it's not, obviously. It worries me a little bit, but you really have to take a look. There's somewhere like it really doesn't work, right? Like I'll give you an example. You couldn't buy Tony Robbins' business because only Tony Robbins can go on stage, and people are coming to see Tony Robbins. But I think like a golfing video, I think over time, and we've tried to do this in the past, is you phase out the guy. Like you still have him in the videos and everything, but he's not the draw, right? Like he's not the guy selling the program. Like, and usually there's sort of like a like transition period where you start emailing like, hey, Ari has acquired this business and he's gonna, but I'm still gonna be here. Like if he had some sort of relationship, but this sounds like sort of like there's a video library as opposed to like you have sort of more, I tend to call them bizoppy things where there's like a guru who's sort of like in the picture, and like that, those are harder to take over. But I think if you have like a video library with somebody, you can usually, if the front end you can change and say like, oh, we have this guy, but he's not selling it or something, if that makes sense. But it worries me a little bit.
Do you have an opportunity to go find more of these kind of upcoming folks and de-risk around that kind of stuff?
Yeah, I think that's also an option, right? I've never bought one in the sports arena, so I don't know. But I think that's definitely an option. Sure. That's not a bad idea, actually. I'll write that down.
I try to add one smart thing per episode.
There you go.
My quote has been met.
Perfect.
Check.
Yeah, I was just thinking this type of business. I guess in this one, you buy it and you keep the guy who's running it because he will be part of the business as a lead instructor, something like that. You're comfortable keeping the people that are running the business running it, or you just change the management?
Usually we change the management, but that's a function of sort of how they fit into like our existing operations, right? If they don't fit into our existing or there's something like unique that's going on, then we're not going to change the management. But a lot of times there's just overhead that doesn't make sense that we're already doing internally, so we don't need to pay for it twice. Like it doesn't make sense. And we don't buy things for the sake of synergy. Like I hate that word. Like that's not why we don't look at something and say like, oh, we can be able to like add 5% onto the pro forma EBITDA when we own it because we're going to knock out these people, because that doesn't necessarily work anyway. So I don't like to think like that, but we don't keep them on board because it doesn't necessarily fit into it unless they're like, good people, we can find a place for them. Right. My goal is not to make people's life miserable because their business they worked for got acquired. So.
Cool.
Yeah,
well, a very interesting one. Ari, where would you expect a deal like this kind of to trade in terms of?
If it's accurate, probably 5 or 6x of the EBITDA.
Of EBITDA.
Yeah, which pains me to say that, but like, I think in the marketplace that it is today, and if it's a strong business, and again, like I think we have so little information to go by here, but I think if it's a strong business doing that kind of cash flow consistently, with a strong customer acquisition engine and stickiness, then yeah, I think it would go there. Again, like if there start to be warts on the deal or hair on the deal, then things will change, as I'm sure you know. So
yeah, has this one been around for a while?
I think so. Not so long. It's impossible to know because the broker doesn't really want it. Like it's very hard to get in touch. I don't know what he's doing. So like at this point, Noah, if you're listening, send me an email.
I think the context here is when you're looking at these types of deals, right? We talked about this before recording. You're signing so many NDAs that like it ruled out a ton of the potential deals that I sent you, or vice versa, that we could talk about.
Right. Well, I think I was actually very pleased to discover it because it meant that I haven't really missed anything from that, like from a deal source. Like that actually made me very happy. I was like, oh, I looked at this, right? And it's unfortunate because, as we were saying, some of them are actually turds, but we can't talk about them. So, which is, I think more informative to the listeners to sort of understand, what puts risks into online businesses, right?
Yeah.
So,
well, and we talked about, there was one deal that we shared, which unfortunately we can't talk about because you signed an NDA on it, but it was recently featured on some other podcasts as being like a good digital marketing deal.
Right.
And when you looked at it, you were like, man, this thing's an SEO quicksand business. Like this, you don't know how long this thing's going to be around.
I think it's great for the people who built it.
Yeah.
Right. Right. That's the problem. Sure.
Well, unless you're going to trade at 1 year's profits, because you can probably estimate it'll stick around for that, but they're not going to want to trade for 1 year's profits.
Nope.
You end up with an unsellable business.
Yep. 100%.
Cool. This is really cool. Franco, any more thoughts on this one? Otherwise, we'll move on to deal number 2 if you guys are cool with that.
Yeah, let's move. This was a really interesting one. Yep.
Okay. Well, cool. All right. So let me switch real fast to our second advertiser to today. As I told you, we're trying to break even. It's the first thing. If you want to be profitable, guys, the first thing you have to do is break even. I don't know if you're aware of that in business, but I've learned that over 26 years. So the other advertiser we actually have is the Acquiring Minds podcast. So this is Will and his team. And he is one of my favorite advertisers because he wrote a script for us to read that actually insults me. So I was like, oh, perfect. This guy will fit right in.
I like this guy already. Yeah.
And so he says, listening to Bill, Mills, and Michael take apart deals here every week, you might think there's no small business worth buying. On the Acquiring Minds podcast, we go the other direction. We focus on buyers that actually buy small businesses and succeeded with them. So it has different stories, and he goes through those. And so he talks through different stories of people buying plumbing businesses, e-commerce brands, all that kind of stuff, scaling them to millions of dollars and that sort of thing. So these acquisition stories and many more are on the Acquiring Minds podcast, available at acquiringminds.co. And I showed the Apple Podcasts link here. So he has done a number of episodes. It looks like the latest one was a guy named Jason buying a 45-year-old software business, which is right in my wheelhouse.
Sure.
some fun stuff there. So check out Will's podcast, not only because he paid us, but also because it's a good podcast. So thank you to Will for supporting our podcast today. And let's move on to our next deal, which is from websiteclosers.com. And so that's a online brokerage focused on websites. So this is an Inc. 5000 online quiz platform with Emmy award-winning writers, premium subscriptions, 1 billion annual page views, 60% returning user rate, automated ad buying tech, custom CMS that ensures traffic scale and ROI. When I read that headline, it makes me think of like Ron Popeil, the guy that would do the nighttime infomercials.
Yes, sure. Just set it and forget it. Absolutely.
He said it and forget it. This sounds great. So I'll skip to the numbers first, and then we'll come back up. They are asking $14 million, real American dollars for this business. It generates $2.5 million in cash flow and does $13 million in gross income. It's was founded 5 years ago and has 8 employees.
Yeah.
That is an amazing revenue per employee number.
Yeah, I love this listing. You can't beat website closers for really knowing how to sell to add the little sizzle. Because it's just
the clip art. The clip art just does everything for me as well.
Which one? The top one or the bottom one? The giant mountain that they've climbed up to? Or
all of the above.
The quiz time. Got it. Yeah.
They're all perfect.
For sure. All right, cool.
So Website Closers presents a unique publishing house that has entertained millions.
Wait, are you going to read the whole thing?
Quizzes.
Sorry to interrupt in the middle of the pod. Are you going to read this whole webpage? I got really nervous. I was like, there goes the whole podcast. It's like a page and a half.
We do not have time for that.
Yeah, go ahead.
I gotta give the people on the audio only a chance to know what we're dealing with here. So they become a thriving media business, 1 billion pages a year with advertisers. So they are a digital ads focused business, the best we can tell here. Through web banner ads and native display that has become enormously lucrative. In 2016, they brought the site together, blah, 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 great team. It has worked entirely as they envisioned from their original stuff. They publish 25 to 30 quizzes a week, have more than 2,400 quizzes and more than 80,000 unique questions in their content library. This content, of course, is entirely evergreen and is easy to combine questions into new unique quizzes that create an endless supply of content. They've been growing 10% every year, all kinds of categories and stuff like that. Talk about how they, cross-pollinate and receive their daily quiz emails, keep people coming back, do engagement. They've been really focused on traffic, SEO, and then they have an active subscriber list, which is 118,000 in their daily newsletters and 600,000 in total. And they have SEO and social media. They write content daily and ad campaigns support organic growth and 4 billion questions, yada, yada, yada. Have translated stuff into Spanish, Mandarin, Japanese, or could be translated to Mandarin, Japanese, and could translate beyond stuff like that. Right now, they're not doing paid ads, according to this, and that's some of the growth opportunities. Could expand premium subscriptions, blah, 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 digital advertising, and so on. And again, they're cash flowing $2.5 million a year, selling for close to $14 million. And it doesn't really say why they are selling. And also maybe why this business isn't as profitable as the previous one we looked at. That's my other first question. Why is it cash flowing so little? But anyway, thoughts or things I didn't mention in terms of this particular listing?
Well, I mean, I don't know why they say they're not buying ads. I mean, they're clearly buying ads, right? This is a funny thing because it's positioned at one thing, but if you read through between the lines, it's basically an arbitrage business. Like, if you're ever on Twitter, I don't know if you get it in Twitter in the States, but Twitter in Israel, the ad targeting is horrible. And so I often get like a lot of like these people of Walmart ads that come up and like they show pictures of people at Walmart and they want you to click. And it's like this endless scrolling picture of people on Walmart that you scroll through and they make money on the difference between what they pay Twitter and what they get from the ad networks while you scroll. And so that's basically what this business is. Right. And that's why their margins are so much different because their cost of goods is all the ads. Right. Like they're spending 11 million or 11 million plus minus, on ads, and people and everything to get people to come to this website and fill up the quiz. And then while they're filling out the quiz, they're serving them lots of ads. Right. It's a great business model, but they're very, very hard to sell. Like I think if you're good at it, like I've never been able, we have sort of like a incubation arm and we try to, to build stuff like this and we're never, ever, successful in sort of building something like this. Probably because like it's just not that interesting. Like it's just like you're just feeding celebrity trash to people to get them to click on stuff. I don't know about this particular business, but it's kind of like if you ever see like a Taboola ads at the bottom of a website. Yeah. So it's usually like if you click on one, you end up on another site and there's more ads. Like we could probably find one on some website you've been to, and that's what it is, right? So
very interesting.
Yeah.
So the danger you run, the reason the net margins are relatively low here, despite there being only 8 employees, and in theory some recurring revenue because they said they have a subscription model, it is because they're paying Facebook, Google for traffic.
Right.
And our Twitter maybe.
Yeah, it says if Facebook, Google, it says it in the copy. It's just buried. Their content is marketed across a wide range of popular online platforms: Facebook, Google AdWords, Twitter, Quora, and numerous native ad networks. So there you go.
So you really run the risk buying this business that because those are automated buying and ad markets on Facebook and those other sites, somebody eventually over time, them getting more efficient and outbidding you.
Yeah.
So that's why these are hard to sell, or what is the core of?
I think they're hard to sell because first of all, you run the risk on both sides, right? You have the demand side. You either your ad account gets banned because at some point they get sick of this stuff because you're not like really selling a service. You're just slinging National Enquirer type content on the internet, which people love, but the ad networks try and get away from as they try and go more upmarket. And then you also run the risk of, the advertising revenue on the supply side going down, right? Like, did I get those right? Demand, supply. The people who are paying you, right? Like, there's like Q1 is always softer, usually in a normal year, right? Like, and just in general, and then maybe advertisers don't want to be on your website anymore. They don't like the quality of the traffic. An ad network bans you. An ad network goes out of business. They don't want to take arbitrage traffic anymore. I think it's like a very specialized part of the industry, and it takes like a lot of knowledge. So I think the only people who could buy this is someone else who's doing arbitrage, right? Like there are people out there. This is like what they do, but I think the only business that could buy this is another company. I had like someone sent me another one the other day in my email, which I am NDA done, so I can't talk about it. But it was the same idea, right? It was the same on a smaller scale, but the margins were about the same, right? Because all the money goes to advertising.
So, I mean, compared to the golf business, the theoretical golf business we just looked at, like that seems like a much better business to be in than this one.
Oh yeah, totally. No, I 100% agree with you. This is a business that I really wouldn't want to own. Like the headline numbers are amazing, like 1 billion angle page views, 60% returning, automated ad buying tech, custom CMS. I don't know why you need a custom CMS. Like everything can just run on WordPress. I'm going to get flamed for saying that, but like, everything can run on WordPress, right? You can just scale WordPress, like or just like HTML. You don't need like a custom CMS. The headlines look great and the gross revenue looks great, but the margins are, like, less than what people make selling on Amazon. Like it's like, a little bit more, but they're for what is essentially a no goods business. It's slim margins, right? Like you want to see margins like the golf business, not like a retail business.
Yeah.
That's how I feel about it.
Interesting. Franco, any questions or thoughts?
Yeah, on the custom CMS, do you think that could maybe give them like another level of protection because they have their own platform, they don't depend on WordPress or something like that, or that's not a thing at all?
No. I think you're like totally at the mercy of the people you buy traffic from, and you're totally at the mercy of people who you sell advertising to. And I mean, that's like, again, that's I think a risk that you could be comfortable with. I think it's just a very hard risk to sell it. What is it, like 7x, 6.5x there? I mean, that's like just,
let's see. Yeah.
That's like
13.7, 2.5.
Yeah, it's about,
so yeah,
it's about
6.5.
Yeah, that's kind of rich. That's a lot of risk to take on, I think, for 6.5x, especially if you're not coming. I mean, like, I don't even know who buys this. Like that's always been the problem with arbitrage businesses. They're great cash cows, but who buys them? No one buys them. Like they just kind of die a death.
If I'm in an arbitrage business already, I mean, you talked about how relatively, like, why am I going to spend 14 million on this when I could spend half a million to $1 million starting my own,
right?
And just outbid you by 10%.
Right. Maybe they have some ad tech. Like I think if you're new to the game, it's much harder to start doing it. I think there's a lot of like knowing the right people in the ad serving space and knowing the right companies to work with and everything. It's like an insider knowledge type thing. I don't think it's as easy as they make it out to me. But I think, why would you buy this? If you know what you're doing, like, why would you buy this? You're just like, oh, I'll just open another site, right? Like, I was only writing, content. I'll do something else. Like, I totally agree. I don't know who buys this, and I think they don't know who buys this either.
So I mean, are there dumb buyers who wade into this stuff and are like, oh, like I can do this, like, and like, is that the hope? I mean, you only need one sucker.
I was gonna say, you hope at this price point there isn't, but I mean, I've been proven wrong about this so many times that there is. I mean, I really, like, you got to say to yourself, like, who you hope somebody who has $14 million lying around is somewhat intelligent, but like, we've been proven wrong before. So money is not a proxy for sense, I guess.
Correct. Well, so I mean, is there a scenario in which you would do something like this? You said you were sent another one. I guess there's definitely a price at which you would buy this business. It's just a long way from 6.5x where it makes sense.
I could probably be convinced to buy it at like 1x, but I can't. But that's me, right? Maybe there's somebody out there who can buy it at 2x, and so they started at like 6.5x. It's sort of like a negotiation play. And maybe there could be people out there who say like maybe 3x. But again, like if you have the money to buy it at 2 or 3x, why? Like that's sort of like the whole problem with it, right? It's like why?
Yeah, so I guess that's you're leading this idea that if your business gets bigger, especially if you're trying to find one sucker, it's much harder. It gets an order of magnitude harder to transact, right? Because what you're at a smaller scale, like, okay, we can find some dentist willing to drop 50 grand on something and be an idiot and not think through it well. But here, like, somebody with $5 million probably is pretty sharp.
I wonder, this is, and again, something else I'm going to get flamed for here. If this was like SBA sized, would it be able to sell? Like if it was like, was it like 5 million now? Like is the cap something like that, 5 or 6 million? And you only have to put 10% down. Could they convince, like, so let's say this business was doing like, I don't know, a million a year, right? And they will ask for 5x. And someone was able to get SBA funding on it, which they would. I mean, SBA would some banker would underwrite it, no question. In this climate, would someone? I think then maybe they'd be able to get somebody to buy it, which I think is really really interesting in terms of where you want to be in the sweet spot of digital acquisitions now. Like if you're looking to sell, like maybe it's a good idea. Like don't price your business for more than the size of an SBA loan, and make sure your company is domiciled in the United States. There's something to be said for that,
Our co-host Bill D'Alessandro uses that to talk about the my asking price is the size of my mortgage, plus enough for me to buy a vacation home. The pricing strategy for certain sellers. Right.
So new pricing strategy is just enough to stay under the SBA loan guide 7A loan guidelines.
So one thing I've read about is how good a business the New York Times crossword business is.
Right.
And their quizzes. But so the difference between the New York Times and this is they're both in the same business, which is giving away free quizzes, selling ads against them, and then trying to upsell you to a paid subscription for the hardcore.
Right.
But the difference is the New York Times has doesn't have to pay Google and Facebook for the traffic, whereas these guys do.
Well, yeah.
Cool.
I think also though that's not fair to the New York Times. The New York Times crossword is an institution. Right. I mean, people want to do the New York Times crossword puzzle. They don't want to do, I don't know, the Washington Post crossword puzzle, right? Like the New York Times crossword puzzle is an institution. And second of all, even then, I don't know who's talking about it, but someone was saying like they don't break out their subscription revenues between because they're public between the gaming revenue and the like the crossword revenue and the major subscription revenue, and that it's quite possible that the people who sign up for crosswords don't convert upwards to like they just stay at the games. So I think that's also sort of sort of interesting. But I think I don't have it in front of me, but I'm sure they also rank like number 1 for crossword puzzle or like number 2. They have all the traffic that they need.
Yeah. Super interesting.
Yeah.
So, as you see a buyer like this with like just an astronomical, crazy asking price in this space, like how useful is it in your time to actually go through the process of telling them where you would price it, or do you just pass on something like this?
Like this, I mean, we're not really that interested in buying an arbitrage business, so that's like an easy one. I think it gets more difficult in businesses we really like that are just priced wrong. And I think often what you need to do is either you need to submit an LOI or just have a call with the buyer and figure out how crazy they are. And I think I don't know if everyone can do this, but if you have a call with people, you can pretty easily figure out how nuts they are. I don't know if that's your experience, but having talked to a lot of people on the phone, it's very easy to figure out who's just crazy. And then you're like, okay, I'm not going to waste my time. And then you have people who are rational. You can just put an LOI together and set it up to them. So,
yeah, it's super interesting. I mean, there's this whole class of businesses that are, like you're talking about here, are worth 1 to 2x to the buyer, but to the seller, because to them it's going to keep going and keep going. Like there's no reason to sell for 1 to 2x,
right?
And they just don't transact.
Right. There's a lot of them. I think we probably even own one like that. Like, I mean, it's just kind of like you sort of get into certain spaces on digital where it's very easy to make money, but there's like not enough value for someone to come and buy it. But you're like, okay, I don't need to sell it. I'll just keep the cash flow forever. I think that's like a totally legitimate place to be. Not all businesses need to be sold if they don't need a lot of, it's not like, I hope not. It's not like everyone here is having like a daily stand up about like what content to write on the website involving the owners, right? Like I think they're probably checking in the ad accounts and that's it for the day. So I hope,
Super interesting. So what are you seeing in the market for this kind of stuff happening now? Or like, is it just like everything else, like SaaS prices, website prices, like they've been discovered and there's a flood of cash going against them? Or are you still finding opportunities for deals?
Both. There's definitely a flood of cash. Also everyone and their mother or whatever is raising a fund, which I find super, super interesting. There's definitely more money coming into the space. But a lot of the stuff that people are really comfortable buying is, certainly people not from the industry is like, they love e-commerce stuff, right? So like Shopify, and then like SaaS, because SaaS people, like everyone knows SaaS. So, the stuff that we don't buy, there's definitely been a uptick in price, and some of the higher quality stuff, there's definitely an uptick in price. But if you can do sort of offline deal flow, sort of not from broker deal flow and find deals that have a lot of, not necessarily hair, but they just need to be improved. I like to talk about like, junkie houses on Fifth Avenue type of thing, right? Like, could be a website with great traffic, but just not monetized properly because the owners forgot about it or didn't realize or things like that. I still think there's a decent amount of opportunity there to kind of search them out, but it requires a lot of work, which I think most people which is great for me, are not interested in sort of like, following up with people for 3 years to finally, buy the site that they had for sale. Right. If I think about a deal that we just finished, but yeah, I definitely think prices through brokers are going up in combination of what, SBA funding money and more capital coming into the space and everything. And I think the other big challenge that I face is, and I'm sure everyone acquiring now is like, how do you price in the COVID, for digital businesses, sort of like, everything went crazy in 2020. I mean, so first of all, like we're talking about the previous deal, the big red flag is if it didn't go crazy in 2020, why not? Unless it's like a travel business or whatever, why didn't you go crazy? And then the other question is, well, is that's not going to continue, but no seller wants to admit that, right? So that's a big, between the stimulus and the fact that everyone was home, how do you price that in? And it becomes a sort of an issue of contention, I think. It drives valuations way up.
Totally dig it. And then you talked just about a deal where, it took 3 years of working with the seller to eventually close on the deal. Is that typical for you? I mean, and I ask that in the context of when I tell people that like serial software acquirers, the mean time from initial contact to close is anywhere from a year to 4 years, and some average 4 years plus, their minds kind of explode. They're like, wait, these don't transact like, Fords
Right.
or Audis from the dealership. So is that typical that these are transacting, you're developing a relationship with people over a long period of time, or are they short, or what is your average in your experience?
I think average is probably closer to like 3 or 4 months. That one was an outlier for many, many reasons, in terms of both our ability to effectively monetize it changed dramatically in those 3 years, and it so made the asking price that they had significantly more palpable in a way that it wasn't 3 years ago in terms of our operations. But I would say it's probably closer to like 3 or 4 months. But it's just like endless amounts of follow up and people getting comfortable. And do they want to sell? Do they want to sell through you? It depends. Broker deals are much faster, right? You send it out because that person is already to sell. But transactions where you're trying to affect the relationship, it's at least, I would say, average 6 months, right? Even for small deals, which drives me nuts. But yeah.
What is the competitive dynamic for people in your space in terms of acquiring and post acquisition? Like how do you think about that? Because well, we talked, I'm not supposed to ask you what you actually own, which is fine. Like, we don't need to know. But
right.
So can you explain that competitive dynamic? Because other spaces, people are totally comfortable. Like our software business, Dura, like has all the listings. Like this is all the stuff we bought. Like, go ahead. Right. How does that competitive dynamic work here?
I mean, I think part of it is just, my personality also, but like the number one rule is you don't talk about Fight Club. But I think like a lot of us just don't want a target painted on our back of people saying like, oh, here's this niche, they bought this site in this niche. This looks like we should start competing in there. Right. Like, and it's not like the niche isn't known or anything, but what do we need the extra competition for? I think is the big thing that we think about. Like, I am very jealous of people like Moses Kagan or Sweaty Startup, who can sort of like, they can talk about their deals because they're like very focused on what they're doing, and there's enough deals that like you don't really have to worry about, especially after the deal is done. I find that to be like very, very liberating. But I think when you're operating on a like sub-institutional scale, pursuing deals in weird spaces where your edge is probably very specific to the industry that you're operating in, I think people don't like to talk about. Like, the old joke used to be like, not the old joke, but the joke is like FBA people who do Fulfilled by Amazon don't like to talk about what they sell, because then if you say like you sell fidget spinners, someone else is going to go to China and buy fidget spinners. So I think we have a little bit more of a moat than that, but it's we don't like 100% talking about it.
Yeah, well, I've come to the conclusion it's just whether you're in a global market or a local market for those guys, and they're like at the far end of the local market. Like, like heck, I'll talk about apartments in Tucson all you want.
Sure.
Like, who cares? Like, because Ari's not flying over there to buy them out from me.
But, you never know.
But if it's, well, I don't know. Have you been to Tucson?
I have. Yes.
Super cool. Franco, any questions or thoughts from you?
Yeah. You just mentioned that normally it takes 3 to 4 months to close a deal. Is there any type of business that gives you a tougher time?
What do you mean?
Due diligence? I mean on due diligence, like something that you really need to dig into it, and that's going to take more to really see if there's anything wrong with the business.
Wow, I find due diligence to be humbling, because I always have this hubris that I've seen a lot of deals and I know what's wrong with stuff, and I've been doing this for a long time, and then I always find something new that I missed, that I hadn't thought of. So I think every time we acquire something else, our due diligence checklist gets longer because of something we screwed up on the previous deal, right? Nothing like earth shattering, but stuff that we didn't think about. I don't really think so. Online businesses are pretty, especially if they're above board. I think like you can, if everything is in Stripe or everything is being paid by Google AdSense and everything is there, and it becomes a function of having the audit team connect the transaction. I mean, that's what we look for. What I think is harder to pick up on sort of is, I would be horrible doing a due diligence like on the website closers one with like all these traffic sources. I mean, I would find that very difficult, because there's just a lot of moving parts. I think the more moving parts there are, the harder it gets. And I think also there's there's always weird tech debt, even on WordPress. It's just like any business that's been around for a few years online, there's just tech debt that no one remembers or no one knows about. And it's not that like they're trying to screw you over. They just totally forgot, and no one's going to find it until something breaks. And then the guy you bought it from goes, oh yeah, like we had that set. And then you're like, so you go and fix it. Like it's not the end, but I'm so, like, there's always there's nothing that does, it doesn't exist that there's not, even just like even if it's like a vanilla WordPress install, there's got to be tech debt somewhere, right? Like it just is a function of doing business. So I think that's probably our biggest challenge. But I don't think there's like a specific industry that we work in. I'm sure like we get sent adult stuff. I'm like, we don't do that. But like, so, like I'm sure in the adult stuff presents its own unique set of challenges, but I don't know enough to really speak about it.
What you have, and this is meant as a compliment, you have a very unique personality and outlook on life. Like,
okay.
What do you think about how you're wired makes this the right space for you? Because frankly, like spending the past 45 minutes with you has scared the crap out of me to go and compete with you. So like, what is it about you as you think about yourself that makes this the right business for you to be in and the right space to compete in?
Oh, I love loopholes, and I don't like people. Like, and so like I wouldn't want to own a business that required active selling. And so it kind of like, and then sort of like figuring out what traffic providers there are and how you can sort of, make more money with just a little bit of leverage in the context of like not monetary leverage, but operational leverage, is very exciting to me. And then it's kind of a business that really, I mean, it wasn't always like this, right? But like it makes money while you sleep, right? It's like, it very much lets you live a certain life. And I think that's like, that really helps me. But I love going down, you've said this before, I think it's true. I love going down rabbit holes. And I think the business is conducive, this type of internet business is conducive to going down rabbit holes and learning about new things. And every time you see something that like kind of piques your interest, even if I'm just browsing the internet, I have like a spreadsheet open on the side. If like I end up on a website, like, oh, this could be an interesting acquisition, add it to the spreadsheet for further contact and research, right? And learn about this industry, right? Like, and so you end up learning a lot about weird industries, and I find that, and there's always something to sort of like, I probably have undiagnosed ADHD or something. There's like, that stimulates you because you're learning about something new. So there you go.
Yeah. Well, it does sound like you have off the charts level of natural curiosity and energy to go pursue those things. And, you're going out and digging into each of these deals and discovering like, what's the scheme?
Yeah.
And I mean scheme in a nice way. What's the scheme I can use to unlock value here, both pre and post?
Right.
And like, that's a perfect, I think the way you're talking about it, that's like that's the answer for me. I think that's right on.
Yeah. It's funny that you say scheme though, because I always feel like and it's probably because I'm from New York, but like, I'm always trying to figure out how the other side is trying to screw me. And like, like it's not because there's also, because no, it's interesting because when you talk about like doing business with worldwide people, there are different people from different countries have a wide variety of, different ethics, I will say politely, right? Like it's totally not politically correct, but like there are people out there like who are trying to screw you. And like, I don't think that's true for everybody, but I think like, especially because you're dealing with literally the entire world is like on some level you're competing against them. You have to figure out like, why am I the person lucky enough to get this deal? Right? Like, what am I missing? Right. So either I'm paying too much for it or there's something I haven't uncovered yet. Right. Like that's usually what I think about. And then usually it turns out that everything's fine. But I go in with Reagan's trust but verify is kind of how I think about it.
Yeah. Well, and then that's exacerbated by, and this is also meant as a compliment because I've told you if I was an American, I'd want to be an Israeli, and you told me that was really stupid. But and then exacerbated by being in New York, living in Israel,
right?
A New Yorker living in Israel, it's like turns it up to 11.
Yeah,
so totally dig it.
Yeah, I don't think it's as bad as you think, but yeah, we've had some. Yes, I'll just say yes and leave it at that. So.
The stories I've heard about Israeli work culture, I'm like, that sounds amazing, except for the part where it would be terrible. But like the stuff where like the intern feels okay calling out the CEO in a team meeting and stuff like that. Like that's the stuff where I'm like, that would just be fun to watch. I'd be totally into those kind of moments.
Yeah, that culture where people, it has its pluses and minuses because the problem is that imagine a room full of people from Twitter.
Yeah.
Where everyone thinks where everyone thinks they're right about something, then it gets and it's like, well, and everyone thinks they know everything about everything, it can get a little bit overwhelming at times, I would say.
Yeah. Super cool. Super cool. Well, this is awesome. Franco, any other questions or stuff for Ari? Otherwise, I think we're a great place to wrap this one up.
No, yeah, this was super interesting. I hear you talk. As Michael said, first I'm working on building an internet business, so having your buyer's perspective, it's amazing. Yeah.
Yeah. My
cool.
only advice would be to you is domicile in the US so you can get somebody with an SBA loan to buy your business. And there you go.
We are domiciled.
Then you're all set, my man. There you go.
Yeah, he's got a hookup in the US between me and our third partner.
Sure.
So,
yeah.
Awesome.
Super cool. Well, first of all, Franco, thanks for doing this. Franco, by the way, everyone got a text yesterday at 4:30, which was, hey, we need an emergency guest host because Bill and Mills can't make it. So, Franco, thanks for doing this. You were awesome. And also not in your first language, which was like super cool, given I could barely do it in my first language. I'm super impressed.
Yeah.
So thanks for doing it. And we'll all shout out for your business. What is the business that you work on, Franco?
It's called Near. It's a job where we're all building to help US companies hire Latin American talent for different types of roles: engineers, sales folks, finance folks. And yeah, there's great talent in Latin. There's a huge salary gap between US market and Latin market. Time zones are the same. So yeah, we think we have a great opportunity there.
Super cool. And thanks to our sponsors, the Scribes. So thescribes.co, you can check out their notebooks and pens, which are super cool, and the Acquiring Minds podcast. So if the editing is good today, you can thank them because they paid for it. So in closing, Ari, I'd love to give you a chance to ask anything of our audience or of us. Definitely appreciate you being so open and with us today. What can we do for you?
Well, if you see any deals in the digital space or you have a deal of your own that you want to sell that's not on the market yet, send it to us. You can just send it to me, Ari at HRX.com, ARI at HRX.com. And why not? You can follow me on Twitter for my occasional rants about life and business and buying business online. It's Ari Ozick on Twitter, ARI OZICK.
Super cool. Yeah, thanks for being here. Great job, guys. I'm going to click the stop button. We'll see y'all next week.